The Magnificent Seven are reporting and their share prices are moving. But are these moves setting you up for a trap? Or is now the time to pull the trigger and pick these companies up for your portfolio? Well, we break down each company's earnings in Q1 2025 and give you our professional traders playbook so you can identify the key levels for each stock moving forward. We are Wealth Within, and with over 2 decades educating over 30,000 traders and investors, we bring you what actually works in the stock market. I'm Dale Gillham, Chief Analyst, and joining me is Wealth Within's professional trader, Philip Tortevsky. Good evening, Philip. How are you?
Good evening. Great. Yeah, exciting times. The reporting season is upon us, so...
It is, and we haven't seen the volatility that sometimes you see, but we had enough of that last month with the Trump tariff, didn't we?
Yeah, and I mean, right now you could be setting up for that perfect combination of, significant correction, some good news coming out on the market. You could be getting some really decent pickups. So, but look, time will tell. We'll get to the charts.
Well, it is. I know we got some really interesting patterns on some of the charts, and they're setting up for some great things moving forward. So don't miss out on that. But okay, let's start from the top. Here is the latest earnings breakdown. And what we're seeing on that is the Magnificent Seven as a Meta, Alphabet, Microsoft, Apple, obviously Telstra as well. But looking at that, that looks pretty good, doesn't it?
Yeah, I mean, to me, the one that really stands out of all of them is Meta. You're talking, EPS over $1 in terms of, actual beat from estimation, which is quite nice. Revenue-wise, it's thereabouts. With all the companies, you're not seeing huge beats. I guess the other standout on the flip side is what we're seeing with Tesla. Missed earnings, everybody knows that. It's, $2 billion short of revenue expectations. So, we're seeing right now, and we've covered Tesla in past shows, so go and check that out. We did a full in-depth analysis. But to me, positive news is fantastic from the point of view, as you said, where, we have come into uncertainty over the last year or so. I would even say before the election, there was a whole bunch of uncertainty. The world was at probably geopolitically the most tense it has been for quite some time. And yet you see these big players, tech players, come out with some positive news, which is good.
Well, it is. I mean, they've had stellar runs the last few years, especially Nvidia. That's had an absolutely, that's gone stratosphere. That's gone higher into the stratosphere than Elon Musk has with his SpaceX from that point of view. But it is a really interesting time because the earnings aren't great, but they're positive. Yeah. So, and I've been saying for a while, well, tech has been running really hard the last couple of years. Don't expect it to do the next couple of years. But we're going to answer that question and pick the eye teeth out of which ones will be the better buy. So we're going to do that in anyway. But before we get into the trading opportunities, look at these stocks. I want to bring up this chart of the combined Magnificent Seven earnings and estimates into 2025. So what are we seeing on the screen, Phil?
Yeah, now this part is, I guess, the most exciting for me because you can clearly see now this is the earnings growth year on year. The Magnificent Seven is in the blue. The S&P or the rest of the S&P is in orange. Now, I guess it's, clear that since December 23, we're seeing a drop in the earnings growth. And now what we're seeing coming into 2025 is that pick up again. So that is only going to be, I guess, bullish for the market moving forward. But the more exciting part, and I guess the reason why are we showing this, it's really to overlay and project, because that's what we do here on the show. It's about projecting forward what's likely to come. Yes. When it comes to trading. And I know, we speak about this so much with students, with traders. It's one thing to read news in hindsight and say, okay, well, this happened, and then I can gauge, okay, X, Y, Z, what the likely scenario is. But the real skill comes in predetermining what comes next.
Oh, how many traders have you talked to out on the street or at an expo or somewhere where we're presenting, and they can tell you what everything happened in the past and why it happened, but when you say, well, what is it going to do in the next month, their mouth stops working for some reason. I don't know what happens. The grease just jams up on them. I don't know. But that's what we do. It's about, this is the difference between most shows, is most shows will tell you what's going on and tell you a lot of what. We're going to tell you when to buy and what to look for in that white space to the right on the chart. So that's where traders, or the good traders, have found, is they know how to understand that white space on the right, because that's exactly where you make any money. Now, did you want to talk any more about that?
Yeah, I did. If we can just go back to it, because it is really, really interesting. The point I'm looking to make here is the fact that, overlaying these themes and trends, because yes, the news has been bearish around the world saying the US market is going to crash. It's all doom and gloom. But you look at projected earnings moving forward, and you're seeing that rise in the Magnificent Seven into 2025. But more importantly, have a look at what's happening in orange. It is expected that, you know, the slack is not only going to be driven by the Mag 7, the S&P 500 outside of the Magnificent Seven are going to start picking up in their earnings. And you put those two pieces together, what kind of overlay do you have on the market moving forward? Well, it's a bullish one.
Yes.
Yeah.
Well, the thing is, to what I'm seeing on that, I mean, and maybe a lot of our viewers may not know this, but the Magnificent Seven were roughly 12% of market cap of the S&P 500 back 10 years ago, 2015.
Yeah.
Today, it's about 32%. So generally what's happening is when those Magnificent Seven are going, and along with the others in that top 10 in the S&P 500, the S&P 500 is moving in whatever direction those stocks are moving.
Yeah.
So that's why the S&P 500 has been so strong. But looking at that graph, what we saw is those quarterly bars, they're all quarterly bars there. So what was in 2023 into early 2024, right now, this Magnificent Seven is looking at half of that.
Yeah.
So we're not going to get that same stellar run that we got out of 2022, 2023, and stocks shooting the light out. Now, obviously, Nvidia shot the lights out, and it's roughly about $3 trillion.
Yes, trillion.
$3 trillion. I
believe.
Roughly.
Yes.
Something like that. It's not the biggest, but it's up there with your Apples. It's up there with your Microsoft, etc. So, but it has done very well. But what rises in a stellar fashion like that has to come the other way, doesn't it, a little bit, to even out. But I'm thinking that it's going to be some steady gains on the tech sector. That's what I'm seeing.
Yeah, and we're going to get into that very shortly in terms of looking at that chart to see those opportunities. But I mean, just quickly to your point, the more exciting bit is because even in Australia, we have been seeing, yes, it's been predominantly, the growth has been dominated by certain pockets of the market.
Correct.
But when you're seeing the breadth, the rest of the players start to get love and, earnings growth, that's only going to fall out in the share price at the end of the day.
Well, that's sort of what I was getting at. With those 7 stocks making up 32% of the S&P 500, and those little orange bars going up, I reckon more of the opportunities are going to be in those orange bars than in the Magnificent Seven. That's what I'm thinking anyway. But anyway, to that point, take a look at this on your screen right now.
Now, this one is basically, again, just to show another visual representation that, hey, if we get strong performance coming out of the Mag 7, that's only going to bode well for the market holding up over the next year, 2 years, because you can clearly see in orange is the performance of the Mag 7, in blue is the performance of the S&P 500. It's actually trumped the S&P 500 in terms of performance, but I guess you can clearly see when the Mag 7 2022 to 2023 fell away, the S&P, the index, pretty much did nothing for that same period. So again, another tick in the box to point in light of the doom and gloom around the world that is, being proposed out on the market. Now, look, something could come out with, Trump policy or things could change moving forward. But right now, as things stand, all of these charts, all of these signals, long-term markers are pointing to the fact that we're going to get more upside on the S&P. And in fact, that recent correction that has happened is now potentially one of those buying opportunities, more so than it being somewhat of a, an onset to a larger leg down. Of course, the chart will tell us the answer.
Yeah, well, what's interesting to me is that orange, which is the Magnificent Seven, that Bloomberg Magnificent Seven index, is up 29.7%. But as you said, it was going up, and the comparison between that and the market just showed you how much weighting that they have in the marketplace and the difference that when they're running up or down, how much effect that has on the overall market. But what's more exciting to me is Tesla through there. Yeah. Because, people, this is where the whole Buffett mentality, buying doom, selling boom. People will be looking at Nvidia going, wow, look at that. I'm going to get onto that because this thing shot the lights out, up 167% between 2021 and that February 2024.
Yeah.
But to me, Tesla's the story, not Nvidia now.
Yeah, well, you're speaking, like a professional, if I have to say so.
But that's the difference between somebody who thinks like a trader and somebody who is learning to trade. Somebody who learns to trade follows the market, and as we know, as professional traders, if you're following the market, you're going the wrong way. You're looking at the wrong things.
Yeah.
And so they're being a product of the market, whereas what we're looking for is the great unloved and getting into those runs before they go and then getting out before they fall away. Whereas those who are learning have a whole different thinking, and it's about having a different shift and thinking like a trader. And people said, when Tesla was shooting the lights out a few years back, I was saying it was going to halve in price, and people kept pushing out I was crazy, and it halved in price. And now people are telling me I'm crazy because I think it's going to go the other way, because it's already halved in price. It's down close to 50%, I think, on its most recent high. I think the opposite's going to happen. So, but anyway, we're going to get into those charts shortly. But now, as promised, let's get into the charts. Now, we're going to go with Meta first, are we?
Yes, we are. Let's start off with Meta. So on your screen, obviously, is the monthly and weekly charts of Meta. And I want to basically just keep it, quite simple here in terms of what we're seeing. And, keep in mind what we just spoke about in terms of where these opportunities are. And that's another thing I want to point out. When you're looking to identify trading opportunities, the first thing you need to, I guess, sit down and determine is what kind of trade will this be for me? Is it a short-term play? Is it a medium-term play? Or is it a long-term play? And to be able to answer that question first really allows you to then move on in I guess, the right fashion and dictate and formulate strategies around that, play, basically, if you will. So when I look at Meta, if we go back to that chart, to me right now, it looks like a short-term opportunity, not a long-term opportunity, because of the nature of this rise that it's had since, literally 2022, as we mentioned. Huge parabolic type rise. Now we're starting to see the sellers come through. We measure the trend that happened from 2013 to 2021. You can clearly see, if I apply some of these momentum lines, that the trend, it was on a sustainable gradient, really, leading up to 2020. Then we start to see the trend accelerate away in this fashion. And oftentimes, as you know, as our students know who do study with us, this is quite normal on markets. They do accelerate in trend. And that is generally that onset where you speak of that euphoria in the market, and probably not the best time to be looking for a long-term opportunity. So going back to Meta, if we can, right now we have had this euphoric type run, more so in the vein of what we saw back in 2021. We're now experiencing that pullback, rightfully so, like this previous period. I think it could fall potentially a little further because, as we said, the earnings didn't, I guess, shoot the lights out in terms of what they were reporting. And we've actually broken through one of these momentum lines that we have. So right now, to me, it is perhaps a short-term opportunity if you're looking to ride spikes in that run. But I would argue, 1 week up doesn't make a new trend.
Can I say this is where the distinction between those who are learning to trade or on that journey to learning and are not traders yet, even though they may call themselves traders, and real traders is. Real traders know the distinction between it's going to be a short, medium or long term. They know that before they get into it.
Oh, yeah.
Because of some of the stuff that you're talking about on the chart. We recognise on the chart that this move is probably going to be a move up, but it's only going to be a short move up, whereas other people who are on that journey to learning are thinking, wow, this thing shot the lights out, it's gone magnificent, now it's really, really cheap, I can get in at a cheap price and it's going to repeat the 100%, 200%, whatever that was in that year or two prior. And we're looking at it and go, it's going to be a buy, but I'm only trading short term on that. And it's also the difference between a trading stock and an investing stock. We find a lot of people can't do that. So, but have we finished on Meta or have we got a bit more to say?
Yeah, no, that's all. Let's go to the next one, which is Google, Alphabet. Now, am I doing this one again?
Yeah, you can do the next one again.
All right.
Keep going.
Sure. Now, I mean, when you look at Google, it is in a little bit of a different scenario to Meta in terms of, yes, again, really speaking to the fact when we overlay the nature of these rises. Look at that, very sustainable through there. We get that euphoric type move met with the same selling. And guess what it comes back to? The natural gradient of rise. Now, again, we've experienced another one of these sharp moves on the upside. And, there's part of me that says, okay, for a more short to medium term play, we're coming into a level that is quite important, that $148 level. But with the nature of this fall, I expect to see potentially with this reversal a leg up. But this is, again, Dale, speaking to knowing and understanding that relationship between the buyer and seller to give you that clue on what comes next. Clearly, we've had buyers push through to the all-time high. Sellers have not only matched that, but they've taken out that previous low. Now, we're at a crux point with Google. Yes, potentially some short-term opportunity given its hit support. But if we start to see buyers play their hand and show weakness only climb up to around that $180 level or less, and then start to fall away again, well, to me, that's a much more bearish scenario. And you get the first clue in terms of what buyers do next. And that's why we're at a critical point with Google itself, because if we do something like what I've just shown,
But Meta could do this as well.
Absolutely. Absolutely. And that's the point right now.
Because this could be, and what we call it a suckers rally, or you say it's saying, is this a suckers rally? But then what happens is people get in, and because it's always those more retail investors getting in, or retail traders, they run out pretty quickly, and then it just turns, and the big end of town are making money from them. And then it turns, and then they're catching a falling knife. And so that's a real possibility with both this one and Meta.
Absolutely. And just on that point, on that chart right there, you can clearly see another, there is a specific technical pattern which might be unfolding that our students would know. And, I'm not going to get too much into that, but it's something to really keep a close eye on, because it is textbook, if you will. And if we break this $148 level, I mean, we're going back down to 120.
Yep. And a lot of people will be saying, hey, Phil, you're crazy for thinking that.
That's okay.
But I don't mind being called crazy, because we're generally right.
Well, yeah, I mean, we got a lot of that when we released the video a few weeks ago, saying that, hey, we think the market's probably going to bottom around here. And
so far we're right. Now, it's not 100% confirmed, but everybody else told us we were crackpots and etc. a month ago, and what drugs are we smoking? But so far we're right. And again, we may end up being confirmed wrong, because the market hasn't proven or confirmed that it's stopped falling, but it's looking like it has. But if you do want to understand the stock market a hell of a lot better, get my book, Accelerate Your Wealth. It's your money, your choice. Now, I did study what in this book is the Dow stocks, the 30 stocks on the Dow. So I've studied those all the way through the GFC and some major crashes, and showed you how you can make obscene amount of money just on using a ruler and a pencil and not complicating things too much. I go into a lot of portfolio management and how you can trade stocks like the one we're talking about. You can get this on Amazon. There's also an electronic version of it, I think a Kindle version of it as well. So check it out on Amazon. But if you do want to learn how to trade, head over to our website, wealthwithin.com.au, and click on the tab that says Trading Courses, and you'll see the list of courses that we do offer there. All right, Phil, so let's get into the next stock. What do we got?
All right, next is Microsoft. Now, this one here, again, I'm just going to apply some lines to identify where we are sitting with things. Again, obviously, a really sharp rise in 2022. To me, these kinds of runs up, they're more conducive to sell-offs, which we have seen. But what's quite interesting, we have come into a level of support at around $3.40, albeit short-term support, and I'll keep this one quite quick, Dale. But for me, the significant part moving forward right now is this.
What a beautiful pattern,
isn't it? And I mean, again, speaking to how easy it is sometimes knowing these patterns, how easy it is to identify what comes next. And strictly speaking with Microsoft, this was a textbook move coming through these levels that would have given you a really early indication to say, hey, you know what? Something's wrong here. We're getting ready to dump. And that's exactly what happened. So given we are now trading under this significant support level around, you clearly saw these lows through here and some up through here where it held around 420, if you will, 400, let's call it even. We're sitting under there now. And speaking to what you were talking about before, confirmation, when is the safe place? It's not just about trying to pick dips and they're not always, but they're not the safe place to get into a chart to make the chunk of that trade, the meat, the profitable part, not, try and pick a low 2, 3, 4 times, get stopped, and then on the 5th time you might be right. But how much have you given up? So right now with Microsoft, we're at that point. We're at this low. Yes, we're seeing a bit of upside to the buy side, but it's got to break $400 for me. Unless it does that, I'm not ready. But
I think you hit the nail on the head. Is people are trying to buy the dips, but they're using one method, one tool, and that's just looking at price. And as you're showing, there's more than one tool to use, and we use price pattern and time. So if we're going to be trading the market with 3 different elements, and most people are trading with one, we're going to be right more times than they are. And I think people overuse price and what they're doing with that. And so when they try and buy the dips, how do they know they're not buying a stock that's falling south? How do they know they're not going to get in a stock that's crashing? So when is a dip really a dip, or whether is it a correction or a crash happening? And most people don't know that, and that's the challenge that they're having. So let's move on to the next one. So what do we got now?
Next we have Apple, which has fallen off more significantly than the others, but again, to me, not surprising. The nature of this run up in May, almost vertical, met with the selling, and I mean, right now we're almost clawing all that back. We got to a low of 170. Clawing it back to 212. So I do potentially see, some further upside and a test of around that 240, 250 level. But again, if you can make anything from what I'm saying right now, they're all short-term opportunities.
They are.
I'm not seeing any real long-term great opportunity, albeit I will add a little bit of difference with Apple right now is the fact that it is coming to a few more confluences, which it's coming to that momentum line, whereas the others didn't. It's coming into this big support through here, whereas the others kind of did, but not all of them. And now it's waiting for that confirmation. Sure, nice volumes come in, but hey, just like back what happened in January 2025, 1, 2, 3, 4, 5 weeks up, you could have thought, hey, we're ready for a big run to test the all-time high, only for the stock to get dumped. Right now we're in that situation. I'm not seeing anything yet in terms of real confirmation that we're likely to go higher. And we do have all of this overhead resistance right now that the stock could very well trade up to before it bangs its head on the roof there and comes all the way back down. So, best opportunity out there on the market? I don't think so.
No, I don't think it is either. But, if you're a good trader and you've got some good solid rules for getting in and getting out, and more sensitive rules, not necessarily ones that take a long time to trigger and you've got a good stop loss, then these stocks are for you. So, but I did want to welcome our US viewers. I know we get a lot of people from the US watching our show, so thank you for watching it. And if you do have any questions around your market, Phil and I are more than happy to answer it. You just need to send an email through to info@wealthwithin.com.au and we can answer them in this show, whether it's a US stock or something else you want to ask about the US market. But I'm excited about this next stock, mate. I am really excited about this next stock. And have a guess what it is.
It's all right, it's Tesla. Let's go to the chart and have a look. Now, naturally, this stock, obviously, it's missed earnings, but what's quite interesting, it's been falling for a few months.
But is that really a problem?
Well, it's not new. And this stock had been falling for months before that. And, if we just apply some, I guess, technical markers, it is moving back to what you would consider somewhat of that respectable or sustainable rate of rise. And that is the exciting part. And I mean, we've covered this in our previous show so please do go check out our YouTube channel because we've got a full in-depth analysis of Tesla and why we think, most of the market has it wrong if they're thinking to dump this.
About 2 weeks ago?
About 2 weeks ago, yeah, you'll find it on our channel. But just quickly, if we go back with a recent update on what is happening in light of Elon leaving or the, I guess, negativity around the Doge and the Tesla sales dropping 71%. In light of the recent quarterly report, have a look at what the share price is doing. It's up.
It's up.
It's up. In light of all that negative news, the share price is up.
That's what I'm excited about.
Right.
So, because the thing is, Tesla's a little bit of a different beast than some of these other stocks we're looking at because I align Tesla more to an Apple type of stock because Tesla is, for those people that love the environment, they become devotees or those people that aspire to own Tesla shares. So they're not as volatile as a lot of other shareholders would be on their stock, and they buy it. That's why it went way, way above its own valuations back before the big lows down into 2022, 2023, whenever it was. And to me, I think Tesla's one of those ones that is just going to shoot the lights out again.
Yeah, and this is why, I mean, a perfect example of why it's so important to go and check information, to go look at price charts. This is why we're such big advocates of learning how to trade on charts and using them, because what you hear out in the media isn't always what is going to be reflected in price. And so being able to make that judgment yourself and identify, hey, something's not going on as I've been told, and in that are sometimes the best opportunities.
Well, it is, and I can guarantee we're going to get comments under this video, people saying, oh, you're crazy about Tesla, China's bid is going to wipe the floor with them and blah, 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 blah. We're going to get all of that. But at the end of the day, Tesla is a different type of company than any normal car company, because of Elon Musk. He is like a Steve Jobs type of person, like the Pied Piper that people like to follow. Yeah. Love him or hate him, whatever that is, your choice. But I think Tesla's here to stay and it's going to be doing quite well over the coming months. So, to me, I love this stock at the moment.
Yeah, it's a must watch.
So what's the next one?
All right, so now Amazon and Nvidia, I believe.
Yes, because Amazon and Nvidia, I think, are reporting today, which is the 1st of May. I believe it's today or in the next few days. So I can't remember. I did read it, I think, yesterday. But they are due to report. So check out what the analysts are predicting with that. So we've got a graphics on that, haven't we?
Yes, we do. So as you can see, obviously, Amazon there, the predictions are up positive 19.5% year on year, revenue growth of about 7%. 0.85%, and net sales between 150 to 155 billion. Where on the Nvidia side, you're looking at also a growth. The previous year was $1.09, 557, I believe that's the EPS. And the interesting one for Nvidia is previous year was 7.19 billion. They're estimating earnings of 24.57 billion.
Wow.
So, it's definitely...
Is that already factored into the current price?
And that's what we're going to get into because, looking at that share price...
Are you holding it out on me, are you?
Yeah, we're going to get into it. But, that is the conversation now because... And the only way to validate and confirm that conversation, because no doubt you're going to look in the news, record sales, they've done extremely well, but is that going to reflect in the share price? And at the end of the day, that's the only thing that matters. When you're trading or investing, it's about earning, getting the right trade at the right time so that you can earn a profit out of the market. It doesn't matter about being, expert economist or...
Well, you don't need to be.
Or getting that right. It's marrying up that the price is going to do what you believe the information...
But this is also showing why the share price did what it did. Because often when we see data like that, people go, wow, look at this data, I've got to go and buy it.
Got to buy it, yeah.
But if you're reading it, the thing's already happened. The market's already made a decision on that because they already know what's happening. Because the big end of town who trade the most amount of stocks have already made their decisions 1 and 2 years ago to get into it, to take those rises up because they expect that revenue. And so this is just confirming what they knew back a year or two ago. When we're seeing it, it's too late. It's old news. And so now you've got to look at the chart, and the chart will tell you exactly what to do with the stock. So the chart will tell us when to buy and when to sell, and making sure we're investing at the right time and protecting our capital. So let's bring up Nvidia and give everybody a piece of your mind on it.
Piece of our mind, yes. Well, we'll start off with Amazon.
Oh, sorry, go on Amazon.
Yeah, but that's okay. What's quite interesting with Amazon right now is we're actually coming into, again, one of those significant levels. And I actually, if I had to, pick out of all the ones we've seen so far, this one has pulled back to, I guess, the most significant level, given how much price accumulated and agreed back in 2021. And what we do know from some classical technical analysis is what was resistance in the past often becomes support in the future if higher prices are going to be accepted. As was the case with Amazon, you saw a test of that previous resistance be support in August 2024. We've come back into that. Buyers have picked that up, as you can see, off that tail through there. So there is buying activity right now. In light of the nature of that rise, again, this wasn't unexpected. If the price were to keep rising up in this gradient, I would have concerns. But if price were to start to slow down and move in a more respectable, more sustainable rate of rise, like this trajectory through here, something like that coming out, then I would say there's more long-term opportunity. But right now, with this volatility, the way it's sitting, 1 week doesn't make a trend either. You can clearly see 1 week up can also be met with further selling. So I would like to see, moving forward, to answer all of that, a nice little test around these levels and see what price does on the flip side of that. But we're in a nice spot, so I actually don't mind where this is for some buying opportunities. If you had to ask me, do I see a long-term hold over the next 12 months? Not yet.
Well, we've got to remember all these earnings reports are for that March quarter.
Yeah.
So we've finished April now.
Yes.
So they're reporting now. April was when all the Trump tariffs come out.
Yeah, I know.
So, and all of these stocks do heavy business with China. I mean, how much of the stuff on Amazon is sold from China?
Well, the other day, just alone, there was this whole kerfuffle around, Jeff Bezos putting the tariff number or the increased cost was on the actual product. And obviously the president wasn't happy with that and Amazon pulled it back. They said, okay, no, we weren't actually going to do that. But the fact that they are looking at that, there will be an impact moving forward, which is interesting what these projections are, in 2025 and beyond. The only thing I can think is if, these tariffs, given they have proven to be negotiation tactics, if that holds and it gets wiped and obviously business goes back to normal.
Okay, Nvidia.
All right, Nvidia now. This one, again, as we mentioned, coming off a stellar rise. I mean, 2022, there were so many opportunities back then that were opportune to pick this one up. It's slowed down in trend. You can see how strong the January leg was. The April leg was on that same gradient, but less in distance. And the third leg was much shorter, again, failing at the previous highs around 142. And then we've had this sell-off. So in terms of Nvidia, if I can apply one of these momentum lines through here, I find that quite promising. So we could start to get, you know, a nice rise back into trend. But again, I'm not holding my hat out for any significant moves yet. I do need to see it break through with some conviction around that $120 level before I get too excited for Nvidia.
Oh, these look that exciting, do they?
I mean, look, for short-term opportunities, sure, why not?
For traders, yeah.
For traders?
Buy and hold or
no, not at these levels, no.
No, and it is, and that's why we're saying with that other graph that look to the broader market. The broader market's going to drive the US market over the next 1 to 2 years because we still don't think it's going to crash. We still think it's a bit bullish for the next 12 to probably 18 months, maybe a bit longer, and we will bring up that in other shows. So we'll be getting into the sectors, we'll be getting into the S&P 500 again. We did that last week. We had a look at those, so we haven't done that this week. But remember, if you do want to understand the stock market and you do want to make better returns with less stress, check out my book on Amazon. Just go there, just type in Accelerate Your Wealth. It's your money, your choice. You better get your copy of that. And again, if you do want to learn about the stock market, it doesn't matter where you are in the world, check out our courses on our website, wealthwithin.com.au. Now, if you want to see more major market predictions, check out our video, Why Everyone is Wrong on Tesla.